Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is August 5th, 2012. Lots to talk about, so let's get started. So this video will be the second video of this weekend, and I'll just be discussing some of the stocks that I'll be monitoring for the remainder of the rest of this week. Not necessarily saying that I'm actually going to make any trades, but just definitely something that I'll be looking out for. The biggest thing, in my opinion, is timing. 90% of these stocks will follow the market, so I want to make sure that the market is in timing or correct timing with the actual individual stock itself. Alright, so let's get started with the first one here. Why not start with the leader of the in the finance sector here, which is JP Morgan. The three-letter code is JPM, and what I'm probably going to do is let me just get rid of this Fibonacci retracement, simply because I like to use Fibonacci retracements just as a validation, but not anything that I would actually make a trading decision on. I rather use trend lines and my mathematical calculation, including reversal candle patterns and moving averages. Okay, so right now we have these two pivot tops here, which constitutes a possible trend line coming down here. We also have this 200 moving average. Okay, so we want to pay attention to the 200 moving average that it's been already hitting. Now again, in my previous videos, like I've always discussed, once a level has been used and abused, then the chances of it holding gets less and less. Okay, the only problem I don't like about JP Morgan is we have these two moving averages here, but one thing I do like about JP Morgan is that it's under the 200 moving average. This shows me that this stock isn't all that strong. Okay, and then like I said before, we want to short weak stocks and go long strong stocks. Okay, because the fact of the matter is, if say you short a weak stock and the market goes against you and it goes higher, then the weak stock won't hurt you as bad as say you went short on a stock like Apple or a stock like Walmart or something like that, where at any moment the SPY or the S&P 500 catches a bid, then those two, like Walmart and the Apple, they're going to be the market leaders, and if you're short those stocks, they're going to hurt you bad. If you're short a stock that's in relative weakness, then it's going to go against you, but it won't hurt you as bad. Okay, so that's why you want to go short weak stocks and long, the stronger stocks. In any case, so we have this upper trend line here. We have this 200 moving average here that you want to pay attention to. A couple other things is I have this 3734 level here. As you can tell, whenever I create these levels are created on the day or over the candle of the day that I created them. So if you see a level, calculated level, say on this candle here, then that's actually when I made the calculation. Okay, so this level here was actually calculated today, or I'm sorry, yeah, today, even though it's over the candle of Friday. I made these calculations today. So you can see these. If I draw a line right on this calculated level, you can see we've already came close to it. So I don't necessarily know if this level is going to hold or not. So here's the deal. If I see the SPY in the 141 range, as discussed in a previous video of when I was going to short the SPY, I think it was in the 140 range. Or if it looks like the SPY is going to turn over and JP Morgan just so happens to be in this level here, then I'll probably take a short on JP Morgan if that's the best looking stock out of my whole stock list here. However, if JP Morgan catches a spike up all the way over here, then obviously I'll take a short trade on this area. But let's just say JP Morgan is over here and the markets look like it's going to turn over, then this chart I will not trade just based on the fact that it's not in good resistance yet. And if it's not going to be in good resistance, then I'm not going to take a short. It's that simple. Okay, so one thing I do like about JP Morgan at this level here is because it's right into the 200 moving average. It's right into this mathematical calculation as well as this upper trend line here. So these are multiple indicators telling me that there's a possibility of pretty good resistance. The one I really like is this gap window here. Okay, now if we are able to break through all of these, then that's going to show me some strength on JP Morgan. It'll be above all the moving averages, and moving averages should be starting to turn up. Then that's going to show me that this stock or JP Morgan may be making a somewhat of a strength or have kind of like a comeback, but I don't think it's gonna be going above this level here anytime soon. Now these two levels here I really like because it coincides with, I believe, the Fibonacci retracements. Let me just verify that and bring it down here. Yeah, so it's a 618 Fibonacci retracement, and you guys know that I love the 618 Fibonacci retracement. I think it's the strongest level of the Fibonacci retracement. I mean, that's just my opinion. In addition to that, it is a gap fill. Well, let me get my other tool here. It is a gap fill here, so that shows even more strength. So I would really much rather see JP Morgan come into this level here before I take a short, because that would be a much better trade in my opinion. Now this is the weekly chart of JP Morgan. Let me just load my drawings back in here and then get rid of this Fibonacci retracement so all those other lines are gone. This is the weekly chart. The reason why I do like the weekly chart here is, let me move this thing out of the way here, this upper trend line, and just look at what we have here. We have this down move, and we have this kind of real messy bearish consolidation, or flag pattern, if you will. And there is a potential that JP Morgan could already come back down, and they've already had their earnings. So this chart is something that I kind of like a lot. It's below, on the weekly, below the 20 moving average and the 200 moving average. In addition to that, this 37.34 level is also a pretty good level, because if these two moving averages can come down, or I should say the 20 moving average on the weekly can come down around this level here, then yeah, it wouldn't be such a bad idea to take a short. And that's only if, like I said, the markets are ready to take, turn around. Okay, so on to the next one. And I'm going to try and rip through this as fast as possible without leaving out important information that makes my trading decisions. So let me just remove this Fibonacci retracement, because it just makes it look that ugly. Alright, so we have this JJC, which is copper, and then we have this upper trend line that comes down this way, right? And then we have this bottom trend line this way, okay, or support level. I do have a calculation here at 43.06, so that coincides with this 50 moving average, the 20 moving average, and this upper trend line here, giving it pretty good resistance. But if we can break through that resistance and come into these two levels here, then I would much rather see that. And again, it's all about timing. So if the markets look like it's going to turn over, then JJC is something that I'm going to probably look at shorting. Just keep in mind that the JJC is copper, and copper normally leads the market. So it's kind of like a like a fortune teller. So sometimes JJC will turn over before the markets will. So it really depends on what level it hits. Again, if JJC is anywhere around the middle in between these levels here, then I'm definitely not going to take a trade. I'll only take a trade when it's in good valid support or good valid resistance. All right, let's take a look at the weekly. Anytime I do analysis on charts, I always want to look at the weekly and the daily, and that's simply because the weekly will always trump the daily, and if the daily pattern fails, it'll probably be because the weekly pattern was the opposite direction. So if the weekly pattern is bearish and the daily pattern is bullish, sometimes the bullish pattern on the daily pattern will fail because the weekly pattern was bearish. Okay, so long story short, here's the two mathematical calculations here. Again, don't pay attention to the purple one, because the purple one is still kind of like in training, just trying to test it out. I may not even leave it on here. It doesn't look like it's actually working as well as I thought it will. But in any case, if the JJC can get into this 20 moving average and these two mathematically calculated levels, then that would actually look pretty good. Let me see if there's actually a Fibonacci retracement here in the weekly that we can see here. Nothing good that I can see. Well, there we have the 50% retracement in this level here. So if we can get again into this level here, then I'd much rather see that, and I would probably take a short trade at that point. Alright, I rarely talk about gold simply because of gold. The pattern on gold has not been good lately. Okay, so I had these mathematically calculated levels, and I've calculated them all the way back on this day here, which is the June 29th. Okay, and these mathematical calculations, again, they're not 100% guaranteed or anything, but they've been working out for me pretty well. Right now, gold has been stuck in this symmetrical triangle, if you will, and it hasn't reached neither this level here or this level here. So that's telling me, to be honest, if gold can somehow get a spike into this level here, I'll probably take a short trade on gold. Okay, this and to me, gold doesn't matter if the markets are going up or down. I'll trade gold. Whether the market doesn't matter what the market's doing, because sometimes gold has a mind of its own. All right. This is the weekly chart of gold, and let's take a quick look here. And what we can see here is this symmetrical triangle. It's a little one, and then we have this bigger triangle here. Now here's the thing: the gold is still under the 50 moving average and the 20 moving average, but on the weekly above the 200 moving average, which is fine. I mean, that's obvious for gold. Gold has just been a rocket lately. Okay, so here's the thing. At these two levels here, the ones that we were just talking about, we have this on the weekly, also the 50 moving average and this upper trend line here. So to me, if gold can get a spike into here, that'd be pretty good resistance, and that's why I like gold as far as that goes. Okay, as a short. All right, this is a chart of the FCX, which is Freeport McMoran. All right, this is the weekly chart. What we have here is this down move and this bearish consolidation pattern. I just want to show you on the weekly first because that probably makes more sense. We have these two mathematically calculated levels here, and if you can see, let me just zoom in here, the 20 moving average and this upper trend line here. Okay, so that's pretty good resistance in my opinion, but even better, we're gonna have really good resistance up here. Okay, but FCX right now, even on the weekly, is under all the moving averages. So what does that tell you? The stock is in relative weakness compared to the actual market. This is the daily chart of the FCX, and as you can see, we had these bunch of mathematically calculated levels also right at this 200 moving average. Okay, and we have again these two moving averages here that we saw in the weekly, which will coincide with this bottom trend line here. So there is a possibility, because we have this down move and then we're just this big bearish consolidation pattern, that we could break down again if the market goes against you. And because Freeport McMoran is below the 200 moving average, however still above the 20 and the 50, it's still in relative weakness. So if the market turns against you, it shouldn't be too bad, or as bad as, say, you went short on Apple and the market turned against you. Okay, so that's FCX. All right, this is a daily chart of Facebook. All right, so Facebook, I'm not going to show you a weekly chart because there's nothing really to see. It's just recently IPO'd. Okay, so if you look at my previous videos, I'm not sure how long ago. Well, I'll tell you how long ago. Around June 1st through June 5th, maybe May 30th or 31st, around there. I called this level here at about, I don't know, maybe it was like 3 cents off or something like that. So that this here around this area here was a mathematical calculation, and made a little bit of money off of that one. I didn't think it was just going to skyrocket high like this. It was either at this level or possibly maybe this level that I got it at 3 cents. In any case, I left FB alone ever since then, simply because that trade was too much of a risk for me. I need to see a little bit more data in order to make a trade. I mean, look at this 20 moving average and the 50 moving average. It's not even, it's can't even develop because it's so new. But for you Facebook lovers out there, I do have a Fibonacci retracement here at the 2.5. Okay, and we also have these two mathematically calculated levels at both positions here. One could be considered intraday, the other one could be considered a swing trade. Okay, so we will have gap fill here. If FB can fill the gap here, we'll have gap window here, right? So it's still, I think my mathematical calculations aren't lining up with these gap window and gap fills. Is possibly because it may bounce off of that or not. I'm not sure, or it's possible that I might not have enough data. But I just wanted to show you Facebook. I probably won't take a trade on Facebook, but again, if we can get into this gap fill area here and this upper trend line, then I might consider taking a short on Facebook, because Facebook right now, unfortunately, it's in a downtrend. I mean, you have a low here, and then you have possibly a lower low here. I mean, if we got two more days, for me, as you guys know, I require 3 days for a pivot. If this goes up 2 more days, then this would be considered a pivot down here, and then that confirms a downtrend. And we have a high, we have a lower high, lower high, lower high. It's in a downtrend. So even though I can't see the moving averages, it's telling me that this stock is definitely in relative weakness. Okay, so this is a chart of the FXE. All right, so this is the euro. We have these or this 123.70 mathematically calculated level, this 50 moving average, this upper trend line, excuse me, and it's still below the 50 and the 200 moving average. On the weekly chart, it's not really a very pretty trend line, to be honest. I don't really like the trend line this angled here, and the pivot points aren't all that great. I mean, we got 3 updates here, which constitutes a pivot to me, or not an update, but 3 candles. But it's kind of slanted. It's really slanted like that. So I might actually wait for the FXC to get up to this level on the weekly chart just to be safe. But again, if the this I wouldn't trade with the markets. Okay. So we have just a couple of more. We have Intel here. This is the weekly chart of Intel. We have this 20 moving average, this upper trend line here, and we have these two mathematically calculated levels right there. Okay, and it's clear that Intel is in a confirmed downtrend. Now here's the thing with Intel, it's still a monster. It's still a powerhouse, and Intel has always been a powerhouse. On the weekly, it's above the 200 moving average, and it's stuck in between the 50 and the 20. Anytime you're stuck in between two moving averages, you know, there's a possibility that you may break out. That's pretty big, and or break down. That's pretty big. And we saw that in the SPY recently when I said that because it was stuck in between, or was it the dollar, in between two different moving averages. We're going to get a big move either on the upside or downside, and that's actually what we saw. It was actually the very next day. I have just don't look at this mathematically calculated levels. Actually, I guess created on this week here, and this mathematically calculated level here was very long ago. So I just leave that in there because that's going to show me pretty good support and pretty good resistance because these levels hasn't been pierced yet. Actually, this one has already been used up. I should delete it because it's already been tagged here before I got another bounce higher. So let's take a look at the daily. Alright, so this is the daily chart of Intel. We have this upper trend line here, just like we saw in the weekly. We have these two mathematically calculated levels that we just recently talked about. Alright, so and we are above. Just keep in mind the Intel isn't as good as I'd like it to be, but we are, and it's simply because we are above the two moving averages here, and we kind of pulled back on this little double top here. If we get a close above this, or in fact, if we get a close above this top here, then there's a possibility that the trend could change short term. So that's something you want to keep an eye on. And right now, I'll definitely not consider taking this as a trade, but it's definitely something to look at because it is Intel. And when you see Intel move, that gives some positive insight on the actual markets itself. Okay, so that's Intel. Last but not least, we have the USO. This is the daily chart of the United States oil, which is USO. We have these two mathematically calculated levels here. We have the 200 moving average all the way up here, which means USO is in relative weakness simply because it's below the 200 moving average. It's been hammered. But if you notice on the daily, the trend is has changed. I mean, we got a low, we got a higher low, we got we don't really have a high just yet. Actually, we did. We have a high here. We have a kind of a pivot here, so this is considered a pivot here. We had a higher close up here, and we have another higher close here, but it really depends. If we can get into this level here, there might be a pullback simply because of this possible double top here. Let's take a look at the weekly to see if we can validate anything else. Alright, so maybe this is why I kind of like this chart better, simply because on the weekly we have this 20 moving average. We're below the 50 and the 200. That's showing a lot of pressure. That's going to be a lot of pressure on the USO. We also have this down move and this possible bearish consolidation, bearish flag pattern here that could potentially break down. Okay, so let me just delete this line here so it looks a little bit easier to understand. I wonder if we have a Fibonacci retracement to take a look at. I don't think we do, but let me just take a look anyway. Yeah, so we have this 382 Fibonacci retracement all in this level over here. Let me just delete this here. All around this level here on the weekly chart, and the 200 moving average and 50 moving average. The 50 looks like it's turning up, and the 20 looks like it's kind of turning up too. But that's there's a possibility we might get a pretty good drop in the USO as soon as it gets into these levels here, if it can even get there. Okay, so there's a good chance USO is going to be a dangerous one. USO, you want to trade in the opposite direction of the dollar because it's a direct impact of the dollar. So normally USO is going to be a USO up, dollar down, and vice versa. So that's something to keep an eye on. So if the dollar looks bearish, then I wouldn't take a short trade on the USO. But if the dollar looks bullish, then I'll definitely consider taking a trade on the USO, or a short trade, I should say. Okay, so these are my not necessarily my stock picks, but definitely something that I'll be looking at for the entire week next week, and to see if anything lands in support or resistance levels that coincides with the market. Then I'll take action at that point. I'll definitely let you guys know if I decide to do that. Okay, so thank you very much for stopping by and watching these videos. God bless to you all. Good luck to your trading, and hope to see you in the next video.